very, very important. It's okay to trade short-term durations as long as when you trade those short-term durations, don't take out the money, just pile it back in and build the base. Hey guys, so in this video, I want to give you 5 tips on how you can succeed as a trader here in 2023. Please do note that when you start investing, when you start trading, it's not about luck, it's not about guesswork, it's not about speculation, it's not also about relying on your friends, but it's something that requires discipline. It's something that requires you taking the time on being serious about it. Always remember that if you want to achieve something in life, you must also spend the time to be able to build the skills, to be able to build the competence in order for you to succeed and do very, very well. So tip number 1 is to stay informed. Keeping up to date with market news, economic indicators, and political developments is crucial in making informed trading decisions. As what I always say in the videos, the more information you have, the more data you can process, the more holistic your decisions would be. That's why it's very, very good to keep track on the stocks that you're watching. Every time they disclose important information, or if there's any announcement like the Fed is actually doing, or the central banks of the countries that you're actually tracking that may impact interest rates, that may impact also movement into the stock market. Or in essence, also it's nice to look at also what are the government disclosures, or what are the new policies also that may affect certain investments that you have as well. You don't have to be an expert in everything, you don't have to know everything, but you have to at least be informed on what's going on the companies, or at least the asset classes that you want to invest in. Tip number 2 is this: you need to create a risk management plan. That includes setting up stop losses and defining a maximum amount of capital that can be put at risk in a single trade. So very, very important, especially if you're using technical analysis. You need to also plot in what are the conditions via technicals also, that for example, if a support is broken, at what point would you start cutting losses, or at what point also would you start shorting also should it go the other direction, or also if it bounces off the support, hits the resistance, you need to also figure out at what point you will also sell when you profit. Sometimes people set cut loss conditions also, but when it's up, they don't know how to maximize their trade and they start selling early. Please do remember this: the goal if you're trading is to minimize your losses, admitting that you made a mistake and cutting your losses, and maximizing your gains. Sometimes you may not need to sell yet when your positions are up, and you need to deploy discipline and wait up until your triggers to sell are hit. And in the same way also, it's very important that you have a firm grasp of how much capital you put in per trade, because at the end of the day, if you put in too much and it goes high quickly, it may cause you to become emotional and you may sell too quick. Or in the same way, if it goes down so fast and you put a larger amount of capital than you should, it will cause you to be emotional. The reason why we're talking about this, so you don't become emotional with your trade, so that you follow your plan to the very letter, so you follow whatever strategies that you have placed, and so that you get to protect yourself. Please do remember this, that investing in the market is not just about being right, but it's about being profitable and having a risk management plan, setting areas where you sell, and also allocating properly for a maximum amount per trade is very, very important. Number 3 is you need to diversify your portfolio. I've created so many videos about this, but I won't stop saying this. Diversification is very, very important. So you need to spread your investments across different assets and markets to reduce the impact of potential losses in one area. I won't dwell in this a lot because I've talked about this over and over, but if you need to hear this one more time, please diversify. If you've heard this for the first time, please diversify. That's what will give you the confidence to actually trade when you have positions that are allotted and diversified into assets that are more conservative. And the ones that are aggressive are ones that you diversified and intentionally put there for you to be able to trade at a very, very aggressive level. Number 4, have a long-term perspective. Don't make decisions based on short-term market fluctuations, but instead focus on a long-term investment strategy. So why am I saying this? The biggest mistake of people when they start making money from their trades is they take out whatever earnings they have. When they start making money from their trades is they start withdrawing it and they buy stuff that they don't actually need yet. The goal of this is once you start earning more is to keep piling it back on so that your base becomes bigger. Remember what I've said in previous videos, that volume is everything, that accumulating a base is everything. And once you start doing well in your trades, don't take out the money, make that volume bigger. The only time you take out the money is when your goal for your investments have already been hit. But if it hasn't yet, then you don't need to take it out. Please do remember, this is very, very important. It's okay to trade short-term durations as long as when you trade those short-term durations, don't take out the money, just pile it back in and build a base. And lastly, you need to stay disciplined. Stick to your trading plan and resist the temptation to make impulsive decisions based on emotion and short-term market movements. Discipline means that you don't rely on your emotions. Discipline actually means that if you're using technical analysis, you follow your buy and sell signals there. Discipline actually means that if you're looking at macroeconomic indicators, that if you know this is something that allows it to become good at a certain point in time, then you follow that as well. A lot of people make mistakes when they trade. A lot of people lose money in their trades because they lack the discipline. When emotions are high, they take shortcuts or they skip their plan. And discipline pushes you to do things even if you don't feel like doing it. So those are the 5 tips. Stay informed, create a risk management plan, diversify your portfolio, have a long-term perspective, and stay disciplined.